the logistics occupier market and the structural change that we're all big believers in and have seen for the last 5-10 years, and we expect to continue for another 10 plus years, that's not changed. And in fact, actually, it's been amplified in a sense by a lot of the issues and concerns that we've all been acutely aware of over the last few months and years. And demand for warehouse space remains at an all-time high, and there's a lot to say that will only increase as we look to combat some of these issues. One thing we can't escape from, though, is that logistics is not immune from wider macroeconomic events and concerns and issues that are at play in the market, namely rising interest rates and inflation, and it is feeling the effects of that as much as any other sector of real estate, as well as any other asset class outside of real estate. So I think on the ground today, what we're seeing is investors looking at what is happening in the wider economy and applying some of those kind of thoughts to the way in which they price logistics assets, even though there's no softening or dampening in terms of their general appetite to invest. If you look at the last 3 to 6 months and people looking at it today, everyone's looking at interest rates and then factoring in those rising costs. We can look forward, 6, 9, 12 months, hit to consumer spending, potential recession, and look at what impact that might have. But I don't think people are pricing that in as of today. I think that any kind of softening in price or dampening in people's view on what something might be worth is principally really focused around interest rates at the moment. I'm trying to think if there's any investors that have said that they're not still wanting to access the logistics market, or has anyone reduced their level of exposure or commitment to the sector. People are still raising money for the sector. I think it's just people are very aware of where pricing had got to. Some of the bigger headwinds that we're seeing over the next 12, maybe even 5-10 years, when you look forward as to what price is right in terms of which point do you need to get into today. So I think, and that uncertainty has meant that activity hasn't been subdued. It's just there is less competition and less depth to some of these processes than we saw certainly last year. But I think, as a forecaster, you could probably say that activity levels at the end of the year will look broadly the same as last year. It's just a different story within that compared to what we were seeing before.